Doug. Streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an options-chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. For those of you who have seen my presentations before, please bear with me. I want to make sure everyone understands my approach to trading. So here are the key tenets. Here's the basis of my approach to trading. I believe options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to the large cap tech stocks like the Magnificent 7 stocks and now the Mag 10 stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the S futures contract is a derivative. The S futures contract is a derivative of SPX, and when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of the trades and the hedge their delta exposure with the S futures. And for the Nasdaq 100, NDX is the underlying index, QQQ is the ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of the trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as their chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Friday, March 6th. First of all, I want to go over news items, economic data, and events for today. Then I'll go over my positional analysis. Then I'll review some setups earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want to take a look at, please let me know and I'll be glad to do that. All right, so my plan today is to go through my entire process. Don't really have any interest in just sitting here and scalping trades. I want to go through my entire process. This is a learning webinar. Learn this process and learn how to find and set up trades for yourself. That's the point. Hello, Stephen. Welcome. Glad you're here. All right, so let's start with news items. And let's start by taking a look at the S&P 500. Get back to the ES. So this is the ES futures and Bookmap. And this morning there are a couple of key data releases. So let's take a look at that data. First of all, a jobs report came out at 8:30 a.m. Eastern Time, and that number came in less than zero. There was a payroll decrease, 92,000 jobs. That was less than forecast, less than the revised number, previous number, and again, less than zero. And the market, and then at the same time, U.S. retail sales came out, and that came in also a negative number, a little bit better than forecast, but lower than the previous number. All right, so that was the data that came out this morning. And this is the ES futures and Bookmap. This is showing the reaction to the data at 8:30 a.m. Eastern Time. And ES had moved up to the SPX 6800 level. That's shown right here, and reversed sharply lower and continued down to the SPY 670 large gamma 4 level. Found support at that level, rallied, and now is chopping up and down and finding a resistance at the SPY 676 round number level. All right, so that was the reaction to the data. Sharp move lower, a rally back up, and now chop consolidation. All right, before I spend more time on this chart, let's step back. Let's take a look at our higher time frame. So we have a reference of what to look at here. So this is the SPX 1 year, 1 day chart in Thinkorswim. Starting with the rally that began April last year. That has resolved into consolidation that began in January this year. And now SPX is in a downward sloping channel, making lower highs and lower lows. Looks like maybe slowly rolling over. So let's take a look. Closer look at a 30-day 1 hour chart. So I've added in a linear regression channel here. So you can see this is sloping down. SPX, this is a 30-day 1 hour chart, making a series of lower highs and lower lows. Most recent price action. This is the Tuesday low that broke down pretty seriously below the 6,800 level. And today, SPX did not undercut that level, so found support around that level, the 6710, and that is just above the 6,700 put wall. All right, so that's the current price action in SPX, slowly making lower highs and lower lows in this downward sloping channel, and so far now holding the 6,700 level. All right, let's take a look at the levels on this chart. I'm going to start with the expected moves. Dashed purple lines show on the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX. From last Friday, those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move. This is also based on the options market. That's based on the closing price for SPX from yesterday. And note, I do post the expected moves every day, the day before, for SPX, ES, and NQ. And note, the lower daily expected move is just right on top of the, just right above the lower weekly expected move. And it looks like SPX is trading right around that level right now. All right, those are the expected moves. And again, I do post those in Discord every day. All right, let's take a look at the Spotgamma levels on this chart. These are based on gamma-weighted open interest that are provided to Spotgamma subscribers on a variety of trading platforms. Again, this is Think or Swim, 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, the put wall is at 6,700, so it dropped down 100 points compared with yesterday. Yesterday it moved up, then back down again. So on Wednesday it was 6,700, and today the put wall is back down at that level. All right, the next level up is the volatility trigger at 6870. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility when market makers are trading with price. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note that is based on Spotgamma's older total open interest model. We'll take a look at gamma, a newer view of gamma based on their newer synthetic open interest model in just a couple minutes. All right, that's the volatility trigger. That level also moved lower just 5 points compared with yesterday. Then the next level up is the absolute gamma strike at 7,000. That's the historical largest absolute positive negative gamma. That's where most of the gamma-weighted open interest is concentrated. And then finally, the call wall remains at 7,100. That's a historical large net positive gamma that can be expected to act as resistance. And certainly the absolute gamma strike and call wall are not in play right now. All right, shifts in levels. Again, the volatility trigger and put wall shifted lower. So that is a bearish brace for SPX. All right, let's wrap up our view of SPX with a 1-minute chart, so we can get a close look at the most recent price action. So note the lows of yesterday, right around this zone here. And that zone today so far has been resistance. So SPX gapped down, opening right at the bottom of that zone. And so far has found resistance. And the resistance level being right around 67.74. Note, again, SPX trading well below its volatility trigger. All right, that's SPX. And also you can see the cluster here. Lower daily expected move, lower weekly expected move. And SPX has been trading up and down around those levels. All right, that's SPX. Let's take a quick look at SPY. Then we'll get back to Bookmap. SPY, the other underlying index component. A couple of key levels today. First of all, this 678.28 combo 1 level acting as support, then resistance. That's the 8:30 a.m. data release. SPY traded down to the 670 level. That's a large gamma 4 level, found support at that level, and rallied and now is finding resistance at the 676 round number level that I mentioned when we were looking at Bookmap. All right, that's SPY. And note the shaded portion, the dark shaded portion is regular trading hours, and the gray shading is overnight hours. And this is on Schwab. SPY trades 24/5 on Schwab. All right, back to Bookmap. So again, key levels. Before the cash open, resistance at the SPY 680, absolute gamma strike put wall. All right, now let's zoom in. After the 8:30 data, resistance at the 6,800 level, that is SPX 6,800, down to the SPY 670 large gamma 4 level, and now again resistance at the SPY round number level 676. All right, so you can see on this chart that I'm focusing on SPX, SPY, and also key ES levels if they're in play, like the round numbers, the zeros and the 50s, and also the expected moves. So you can see here the ES, that's a lower weekly expected move, and the ES lower daily expected move. And I do calculate those separately from the SPX expected move, since ES closes at a different time than SPX. All right, so those are the key levels in play. And note there is a difference in price between ES and SPX, and after rollover that number will increase substantially, and then it continues to decline, approaching zero until the next rollover, which is approaching in a week or so. All right, so note that difference today, the ES to SPX offset is 5 points. So I'm showing SPX 6,800 at ES 6,805. And there also is an ES to SPY ratio, and I post those index relationships that I use every day in the Options-Doug chat channel and Discord. All right, those are the levels in play. All right, for SPY, the volatility trigger also shifted lower, and the absolute gamma strike shifted lower. So that was a bearish brace for SPY as well. All right, let's move on. Let's take a look at Nasdaq. Then we'll get to some setups in the live market. So here's Nasdaq. Reaction to the data. Sharp drop from NQ 24,900 all the way down almost to 24,600. So about a 300-point drop in Nasdaq. Then a rally back up to that level. And actually a little bit higher to the QQQ 606 volatility trigger. All right, that's Nasdaq, NQ futures and Bookmap. So let's take a look at the underlying index charts. I'm going to start with QQQ. So we can isolate some of the levels in play. All right, there's QQQ. Let's zoom in on this. Overnight resistance at 611. Note all these indexes started to drop around 4:30 a.m. Maybe that was European Open. So QQQ traded down from 611 all the way down and below 599, recovered the 600 put wall absolute gamma strike after the open, is trading higher, and traded up to and found resistance at the 606 volatility trigger. Let's check that. It looks like the high of that bar is exactly 606. I was getting that information up here. All right, so that's QQQ. Trading above the 600 absolute gamma strike put wall, but finding a resistance at the 606 volatility trigger. Let's check NDX. All right, NDX gap down below this combo 1 level, C1 level, at 24,245. Zoom in on this just a little bit. finally finding a support at that level, and that was a good launching point for long. And then up to and above the 24,769 zero gamma level. All right, that's NDX. Back to Bookmap and Q Futures. Zoom in on this. After the open, NQ made a series of higher lows, higher highs. Last was at that combo 1 level, and also the 600 absolute gamma strike put wall, and up to the volatility trigger at 606. And Anaya, sorry about the pronunciation. Welcome, glad you're here. Anaya asks, is that indicator? If you could be a little bit more specific, I'll be glad to answer your questions. All right, that's the Nasdaq futures. We'll take a look at setups in just a minute. All right, just to wrap up, for NDX, volatility trigger shifted lower. Same for QQQ. And typically, of the 4 key daily levels, volatility trigger is the one that changes most often. So it dropped for SPX, SPY, NDX, and QQQ. And by the way, for RUT, the Russell 2000 index, all 4 key daily levels drop lower. So that's pretty bearish for Russell 2000. All right, we'll take a look at setups. Let's wrap up our positional analysis first by taking a look at gamma, so we can get an idea of the expected volatility and trading range for the day. So this is the Trace Gamma heat map. It's available to Spotgamma subscribers. This chart is showing market maker's gamma position. Red shading indicates negative gamma. Remember, in negative gamma, we're looking for higher volatility with market makers trading with price. And then blue shading, we're looking for, blue shading shows positive gamma, and positive gamma, we're looking for lower volatility with market makers trading against price. So note that SPX is firmly in a zone of negative gamma. So we're looking for higher volatility in that zone. And by the way, the white and black candlesticks show price for SPX. And then that purple line is the hero signal. So let me point out just a couple things here. First of all, it looks like there was an iron condor today, or there may still be. So this is a trader iron condor, meaning the trader is long. Traders are long the SPX 6665 put, short the 70 put, short the 6805 calls, and long 6810. And it looks like also this positive gamma has popped up right at 6745. Interesting, that's a 99 percentile strike. Let's step back in time and see how this has developed. So we're looking at market maker gamma position over time. So we can see this short put spread, pretty large here. This is 10 minutes after the open. So this is updated every 10 minutes. So let's step through time. So we can see in the next 10 minutes, the short call spread was added at 6805.10. And as prices moved up, that gamma position in the put spread has diminished as time passes and price moves higher. And then this gamma has started to appear at 67.45. That's kind of right in the middle of price action. Right back to current time now. All right, so note the two spreads, the call spread and the put spread, the gamma has diminished as price stays within that range and time passes. All right, so the primary point here is SPX is currently in a negative gamma position, and we're looking for a higher volatility. All right, so let's move on. Let's take a look at some setups now. Then we'll get to the live market. I'm going to start with the S&P 500. This is the hero signal. This is available to Spotgamma subscribers. What this is showing is options trades and market maker hedging activity for the S&P 500 index components. We've already taken a look at a couple of those. That's SPX and SPY. This also includes ES and XSP. So the white line is price, orange line shows calls, blue line shows puts. Direction of the lines indicates options delta. So a rising orange line, rising blue line indicates traders are buying calls and selling puts. Market makers take the opposite side of the trades, and they have to buy futures to hedge their delta exposure, and then vice versa. All right, so what this chart is showing is from the open, traders were selling index puts. They took the foot off the gas, started buying a few puts, and then just before 9:50, traders stopped selling calls. So they were selling puts, selling calls, right around 9:48, I guess. They stopped selling calls, started buying calls, and just a few minutes later, that's when the S&P 500 made that final low after the cash opened and started rally. So this call line was providing somewhat of a leading indicator there. And that's why I like to separate out puts and calls. So traders started buying index calls. And just a few minutes later, looks like about 10 minutes later, the index started to rally. All right, there's another hero signal that we can take a look at for the S&P 500. This is the S&P 500 equity signal. And this is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So this is showing from the open, traders were selling calls and buying puts. Those are both bearish. And then just before 10 a.m., these lines reverse sharply. Note this. Large vertical line here indicates an institutional block order. So this indicates that there was a large institution buying a large number of calls, and I call that an institutional kickoff. So traders started selling puts, buying calls, and price moved higher. So we're looking at both hero signals, calls and puts separated. So we know in the equity signal, traders started selling puts and buying calls. In the S&P 500, traders started buying calls, driving price higher. All right, so that's the current picture. A little bit of move down for the first, almost the first half hour, then a rally as the hero signals shifted higher. So let's go take a look at order flow and Bookmap now. Let's zoom in on this. So we'll look at the first 2.5 hours of trade. All right, so we know traders are taking positive delta positions. So when we see that, we're looking for an entry point for long and looking for levels that could act as support. And that first level that could act as support. SPY 670 large gamma 4 level. That's exactly what happened. Sellers are exhausted. Buyers come in. Shift to green volume dots. They're not large volume dots, but buyers came in aggressively just before 10 a.m. Note also cumulative volume delta here. That's shown by the magenta line that shifts to dark blue when it becomes positive. That started rising before that last test of the 670 level. And you can see all the green volume dots coming in here, indicating there were a lot of buyers coming in. And they finally took control just before 10 a.m. Pullback entry here to the 671 level. Then pretty much a continuous rally up to 676. And then another pullback and a move higher again to 676. And note also, cumulative volume delta was rising. And as well, after the move started, large traders joined that with iceberg orders they used to hide their size. That's shown by the rising light blue line. A little bit unusual. Usually large traders use iceberg orders to fade the move. They'll sell strength and buy weakness. In this case, they were buying as price moved up, shown by the rising light blue line. All right, let me check for questions. And Arash Electric, welcome, glad you're here. How do they know that calls are being sold or bought? Why no other brokers can provide this info? All right, so for second question, I don't know. Actually, brokers do provide that information, but Spotgamma provides provides in a format that you can use for trading. So let's go back to Hero. All right, again, the directional lines indicates options delta. So we know for calls, when traders buy calls, that's positive delta. So I know traders are buying calls because the orange line is rising. And also when traders sell puts, that's also positive delta. So I know traders are selling puts when the blue line rises. And then I know traders are buying puts when the blue line falls. Excuse me. All right, let's take a look at one other thing. Let's go to Thinkorswim. Let's go to the Trade tab. This is SPX. All right, so you can get information about traders buying and selling puts and calls in probably any trading platform. It's available here. So Thinkorswim showing the total volume of calls, total volume of puts, and they can't provide specific information on traders buying calls or selling puts, but they can show with some certainty traders traded on the bid, on the ask, and then between the market. So you can make some assumptions there. All right, so brokers do provide that kind of information. And Terzog, welcome, glad you're here. Ask, why don't you use the Bookmap built into TOS? Is it really that much of a difference from the standalone? Yes, it is. Now, certainly, the Bookmap version of TOS is a good value. So I think it's $40 a month, and it includes data, but it is a very old version of Bookmap. And so that does include data that can be quite expensive for futures and stocks, DXV data. And again, it is an older version of Bookmap. It doesn't include any add-ons. So right now I'm running the latest version of Bookmap. Which is 7.7. So that is the hope that answers your question. So Bookmap, this has a lot more capabilities. It's a much newer version. You can't run any add-ons. You can't trade in Bookmap. Here I can trade futures or stocks. All right, so that's the S&P 500. Let's move on. Let's take a look at Nasdaq. Then we'll get to some stocks, then the live market. So Nasdaq, similar pattern. Bullish opening drive after chop for a few minutes. Let's see what options traders are doing. So let's go to the Nasdaq. So just like the S&P 500 index, there S&P 500, there are two signals that we can take a look at for the Nasdaq versus the index signal showing options trades and market maker hedging activity. For the index components, we've already taken a look at those. That's QQQ and NDX. So what this is showing is, zoom on this just a bit. From the open, traders were selling puts, taking advantage of the high volatility. By the way, the white line is price for NDX. So they were selling puts and then eventually started buying calls right around 10:10, and Nasdaq moved higher. All right, there's Nasdaq. Traders continue to sell puts and buy calls, shown by the positive delta notional for both the blue line and the orange line. All right, the other hero signal that we can take a look at for Nasdaq is the Mag 7 signal. Let's zoom in on this. So what this is showing is initially traders were buying puts and selling calls, took the foot off the gas, then starting around 10:10, call buyers came in. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. All right, here's a pattern that you can take note of. Note, traders started buying puts just before 10:45. Then a few minutes later, the call buyers took their foot off the gas. Looks like a large block, some block orders there coming in, and that's when Nasdaq started to turn lower. All right, that's Nasdaq. Back to Bookmap. Rising cumulative volume delta shown by the magenta line that briefly turned to dark blue when it became positive. And that shut off just after 11. Here's a level that you expect to act as resistance, the QQQ 606 volatility trigger, and that's exactly what happened. All right, so that's Nasdaq. Call buyers, put sellers have taken the foot off the gas, price consolidating. All right, let's take a look at some stocks. Anyone have any questions about the indexes? All right, I've got some stocks I want to take a look at. First is Google. Zoom out just a little bit. You can see the V shape at the cash open. Google trading down before the open. And actually started to trade higher a few minutes before the cash open. Here's the opening print. Google had already been moving higher, and that's when the options trader joined the party. So let's see what they were doing. So let's go to Google. Sorry. All right, Google. This is a pattern that I've talked about many times. We'll see several examples of this today. Bullish opening drive. Call buyers come in, shown by the rising orange line. Full alert comes in, signals significant options activity. Get your attention. Again, when traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. Nice pullback entry. Right around 9:45. Large block order, large institutional order selling puts, shown by the rising blue line. At this point, this is bullish momentum. Trader selling puts, buying calls, and taking price up to the 300 key gamma strike. And that's when the put sellers, call buyers took their foot off the gas, and Google started consolidating. So you can see the move here lasted for just over an hour and was over pretty much by 10:40. And actually, maybe by 10:20, that's when Google reached the 300 key gamma strike, the key target, primary target for that move higher. So let's go back to Google. All right, so Google, there's the move. Again, started at 294 before the cash open, and then resumed right after the cash open. Large green volume dot opening print. Pull back to the 296 level. That was that entry point. Good entry point for long. And traders continued to buy shares, buy calls, sell puts, until the 300 key gamma strike. That was the primary target. So move from 296 up to 300. Note in the subchart here, I have a couple of indicators. First, cumulative volume delta, and that is pretty heavily influenced by this large opening print. It is sloping up slightly. Then also in the subchart area, I have the market pulse price change indicator, and this helps me to locate the deeper pullbacks, higher probability entry points for long. Lining up here, here, here. So that's the market pulse price change indicator. And note this, the market pulse add-on has a number of algorithms. Price change, the one I like and the one I use, is free. So to any Bookmap subscriber, the market pulse price change is free. All right, that's Google. All right, next stock I want to take a look at, NVIDIA. Very fast, bullish opening drive. Again, the move was over in 30 minutes. And there's really not much point in trading right now. The easy money was made in the first half hour. So let's see what options traders are doing. All right, so let's go to NVIDIA. Zoom in on this. Traders selling puts from the open, shown by the rising blue line, taking advantage of the high volatility. NVIDIA pulls back to the 180 hedge wall key gamma strike. Traders continue to sell puts. That's when the call buyers came in. So bullish momentum up to just after 10. All right, so that's a bullish momentum pattern and then somewhat of a reversal pattern. So these opening drives can lead to either consolidation or a reversal. So bullish opening drive, bullish momentum when the orange line, blue line move in the same direction. And you can see the call line starts to waver. One last push up. Very nice call peak. That's a very reliable reversal pattern. And you already know that traders had stopped selling puts. So they stop selling puts, start buying puts. Last call peak forms. If you're still long, time to get out. And another trade that you could take there is to sell a call spread or buy a put spread, and with the assumption that NVIDIA is going to stay below that short strike in your spread for the rest of the day or whatever time period you choose to trade. All right, back to Bookmap. So remember, 180 hedge wall key gamma strike. Trader selling puts for the open. That's bullish. Let's zoom in on this. There's that pullback to the 180 level. Market pulse price change confirms a long entry. Trader selling puts, start buying calls. Another possible entry there. Market pulse price change did not quite get down to the red extreme. Next pullback entry. Key target up above us, the 183 liquidity. And price did not quite reach it to that level before the put buyers came in and the call sellers took their foot off the gas. All right, now let's take a look at a couple of additional stocks. So we have the Mag 7, and then there are three more stocks that make up the Mag 10. That's a new index I found. That's AMD, Broadcom, Palantir. Let's take a quick look at a couple of those. All right, Broadcom reported earnings this week. Traders were happy with it. Continuing to move up. Just like Google, Broadcom started to move higher right before the cash open. Let's see what options traders are doing. Let's go to Broadcom. One of the three additional stocks that make up the Mag 10. Bullish opening drive. Full alert comes in just after the open. Get your attention. Signaling significant options activity. Traders aggressively buying calls. And this move lasted a little bit longer, up until about noon, as Broadcom moved up to the 340 call wall. And note it did slow down after 10:15, so 45 minutes into the move, really reached the target, and then just started to move higher right around 11:30 again, up to and above, and now chopping around the 340 call wall. And note there was a pullback down to and below the 330 key gamma strike. So you could have traded that for a 10-point move. From 330, actually let's zoom in on this. From 330, or actually I would have, that was a safe entry point right there at 330. Sellers are exhausted, buyers start to come in, traders continue to buy calls. Also, that's VWAP there, that light blue line. Market pulse price change, pullback extremes, good entry points for long. Up to the target at 340. So it looks like absorption at this level. the limit sell orders in the order book at 340 call wall were not consumed. Broadcom pulled back to the 335 level, then began to rally again as call buyers came in and took it up and through that 340 level. All right, next stock, Palantir. Very strong day in Palantir. Part of the software group that has been beaten down so much recently. Also a defense stock. So Palantir somewhat on the sweet spot today. And note the rally continues. So this is a little bit unusual. A very strong move in Palantir, continuing to rally. Let's see what options traders are doing. All right, traders are buying calls. They continue to buy calls. Primary target, 160 call wall. It looks like Palantir is trading up to and above that level. So call buyers definitely driving price. Again, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Palantir, very strong, kind of an unusual move here where the bullish opening drive is just continuing all day. Rising cumulative volume delta, shown by the dark blue line there, a lot of aggressive buyers. You can see all the green volume dots. There's the 160 call wall. Those are limit sell orders in the order book. Primary target, those orders were consumed. So there's a 10-point move in Palantir. Very nice. All right, last stock I want to take a look at is Marvell. Semiconductor stock reported earnings. Traders are happy with the earnings. Buying shares, shown by the rising cumulative volume delta. A lot of green volume dots. Let's see what options traders are doing. Go to Marvell. Again, traders buying calls. Marvell breaks out above the 85 call wall. Traders continue to buy calls, take the foot off the gas, start buying calls again. And now they've taken the foot off the gas. So stepping higher. Traders buy calls, stop, and then start buying calls again. There's Marvell. All right, let's take a quick look at a couple of other stocks. I don't have those on Bookmap. KTOS, defense contractor, also moving higher. Traders buy calls. KTOS moved up to the 90 key gamma strike, and then it looks like stalling at that level. Then finally, USO. This is the ETF that tracks crude oil. Also bullish. Traders selling puts, buying calls. And we know the crude oil futures, the West Texas Intermediate, has traded up and above 90 today. Let's check that. Back to Thinkorswim. All right, so right now, crude oil trading. Actually, crude oil trading above 90. All right, let's go back to the indexes. Does anyone have any questions, comments? Go back and take a look at the S&P 500. So looks like, again, the move is over in the S&P 500. Go to ES, chop. All right, there have been quite a few questions in Discord. I really appreciate all the interest in the Options Dash chat channel. I want to address a couple things. First of all, trading can be expensive, and there's been quite a bit of discussion about especially how expensive Spotgamma has become. I definitely understand that it is quite expensive. So let me address how to get started trading. This is my suggestion, my approach for getting started trading. First of all, I suggest starting with Bookmap. And you can go with Global or Global Plus. Global Plus does have some additional add-ons, some additional features, primary. If you want to trade within Bookmap, which I find incredibly valuable to be able to trade within Bookmap, you'll need Global Plus. All right, so the second step is data. And you need either futures data or stock data, depending on what you trade. So if you're just getting started, I suggest starting with one or the other. I have both here, so I can trade futures or stocks. Or if you only trade indexes, my suggestion is to subscribe to Bookmap data. It's less expensive than stocks data. For the CME exchange only, so you get ES and NQ, and then you can mark the SPY and QQQ levels on this chart. I give you the index relationships to do that every day. So that is free. So that's a good way to get started if you trade the indexes or if you trade futures. Again, Bookmap data, I highly recommend. Very reliable data, includes MBO data. All right, then for stocks, if you trade stocks, I suggest there are two data feeds that you can use. All right, first is DX feed. That includes Nasdaq total view, and most of the order flow, the high majority of order flow trades on Nasdaq. Also includes EDGX. Now, Bookmap data also does provide stocks data as well. That's Nasdaq only, but it's less expensive than the DX feed. So either one. So if you trade stocks, you need stocks data. And if you trade futures, you need futures data. Start with Bookmap. And then again, that market pulse price change indicator that I talked about, that's free. So that's a way to get started. All right, next step, Spotgamma offers 3 levels of subscriptions. I suggest starting with the lowest. I think that's the standard, and you'll get the Spotgamma levels. And I use this price lines add-on to show the Spotgamma levels on my ES and NQ charts. But you can also use the Spotgamma cloud notes, and I have those cloud notes for SPY and QQQ. Not showing any levels. There's SPY. There's that 640 level that I talked about earlier today. Check QQQ. And there's that test of the 599 level and the 600 put wall. All right, so that's how to get started. Start with Bookmap, start with data. If you become proficient, move on, add Spotgamma. And by the way, Bookmap provides the best training that I've seen anywhere. It's all free. Go to the Bookmap Learning Center. There are there's background information, how to use Bookmap, and there are also live webinars every week showing a variety of trading platforms, a variety of instruments. So that's how to get started. And Stephen asked, can you also recommend how best to learn an option strategy with Bookmap? What's the best approach in terms of going about learning how to trade options? So that's a little bit more difficult. So Tasty Trade does provide free information. That's background information. But their approach is premium selling. And then I would suggest, if you're really interested in trading options, that you join Spotgamma, join that basic level. Spotgamma provides pretty substantial learning resources as well. All right, how does one prove or backtest an option strategy? So there are a couple of approaches. First of all, if you want to pay for backtesting, if you want backtesting, you're going to have to pay for it. So that's the only approach. Bookmap does provide some on-demand backtesting. I've never had much. Thinkorswim provides that. I've never had much luck with that. So Options Omega, for example, but you're going to have to pay for that if you want to backtest. Yeah, definitely Bookmap, best place to learn real order flow. So my suggestion, and Structure TP 2026 asked, how much each cost? Is there any deals? So I can't speak to price other than I do know the prices for Bookmap. Global for a monthly subscription is $49 a month. Global Plus, $99 a month. And Bookmap futures data for CME exchange only is $34 a month, half off your first month. DXFeed and Bookmap data for stocks, I'm not sure what the cost. And as far as I know, there are not any deals right now. Bookmap typically offers pretty substantial deals at the end of the year and the beginning of the new year. So just watch bookmap.com for deals. Right now, I don't think there are any available. But again, the best way to get started with Bookmap is to subscribe to Global for $49 a month and Bookmap data, futures data, CME only for $34 a month. And you can get started for less than $100 a month. And then you can use the substantial outstanding learning center available on bookmap.com to learn how to use Bookmap. One other thing, once you start using Bookmap, you can start marking up your charts, join Bookmap Academy, and if you join Bookmap Academy and qualify and start meeting the requirements, then you can start to get Bookmap discounts, free Bookmap, free data. So get started, go through the Learning Center, then join Bookmap Academy, and you can have your trades reviewed by coaches and peers and get discounts, and then get started from there. And then again, Spotgamma, start with the lowest, the standard subscription to get the Spotgamma levels. All right, everyone, my time is up. I want to thank you very much for watching. If you have any questions about what I've been talking about, please feel free to post in the Options-Duck chat channel, and I'll be glad to answer your questions. All right, everyone, thank you very much for watching. Thanks for your questions and comments. And I will see you on Monday. Have a great weekend, everyone. Bye.